literally if you do this,
Wait.
important algorithm, and literally if you do this, Bitcoin will be pumped, 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 Bitcoin will be pumped.
Hello, welcome again to our series of videos on how to trade in Luno, Uganda. Today we are going to talk about mainly risk management in trading. So when we talk about risk management in trading, this is where we use our stop loss. So stop loss simply helps us not to make a lot of losses while we are trading. I want to talk more about stop loss. Stop loss is when you have a target and you have a limit whereby you're saying, when I'm trading, I don't want to lose this much in case prices start moving up or down. So, but basically I'm going to talk about down, because most of the people don't make losses when prices move up. It's instead they profit when prices move up, depending on the price they bought it at. So I'm talking about this stop loss on the time when markets dropped this night, and it terrified, it put a lot of people on panic, most especially the newbies. So, but this should never put you on a panic to make losses. You can organize yourself earlier to be prepared for all these situations, for all these scenarios. So don't be on a panic when prices start dumping. Make sure you use risk management. That's a stop loss. So it's possible we can trade stop limits in Luno, Uganda as well. So I'm going to show you how we can do that in Luno, Uganda. You sit down and you say, yes, I'm entering into this trade at this and this price and this a time. So, but I expect the trade to move up, the prices to move up. But in the scenario whereby markets go against your position, so that's where we need to apply in our risk management. So that's where stop limit comes in. So today we are going to share basically how we can trade stop limits in order to manage our volumes or to manage our portfolios, to avoid a lot of losses when markets go against our position or our order. So I'm going to share with you just a simple strategy that you can use while trading stop loss. But you need to first know that how much am I ready to lose? So what percentage am I ready to lose in a trade? So whenever you enter in any trade and you want to manage risks, you have to first know how much you're ready to lose according to the volume you've position yourself at. So let me jump straight forward into the real actions. So here, whenever you want to buy or sell, so it depends. So but most of the people always want using stop loss when they're selling off. It's like they've already bought their bitcoins and they're holding it, and maybe they are waiting for a specific price to hit, then they sell off. But there are also scenarios when markets can go against you, just like today. It is just an urgent move that markets have overdumped. So what you do, you come and press on sell. So on sale, you'll see still there's limit, market, and stop limit. We have discussed all about limit and market. So today our emphasis is on stop limit. So what you do when you come to your Luno app, the interface has limit, market, and stop limit. So you simply click on limit. So when you click on limit, you'll see stop price. Then you see also limit price. So I want to differentiate, to explain in a simple way the difference between stop price and the limit price. So stop price, it is the price on which you say that no, once the markets drop until this, that means it is the amount you're ready to lose. It's the percentage you already calculated before you enter a trade that you're ready to lose. So you position yourself in that way, that when the price hits this, let my trade stop, let the markets stop. So that means the markets, the prices are not going to drop and you end up losing all what you were not ready to lose. So let's go back at our interface and we look at the prices and we compare, so you can have a clear picture of what I'm trying to discuss here. So let's go back to our interface. So let's look at a change in price. It's 5% so far. Then the highest price it hit today, because we are looking at a 1 day time frame chart. So that's what we are looking at. So 153,274. That is the high price of the day. Then low, it hit up to 140,826. So that's how our markets have moved today. So if you look at this difference, it's really a very big dump. It is almost 11 million, if I'm not mistaken, 11 or 13, yeah, or almost 13 million UGX if you're to find a difference. I'm not going to calculate this other, it's because it will give me a lot of hard time to read it, but let's assume it's almost 13 million that you'll be losing in that small process of the markets dropping from 153 million to 140 million. So assuming even you may have bought your Bitcoin when the price was maybe around 152 million. So now if it drops up to this, that means you're losing something very much. So assuming now you don't want to lose everything and you say, since I bought my Bitcoins at 152 million, so in case the price starts to drop, so that means I'm only ready to lose 2 million. So once the price hits to 150, let my trade stop. So after it hits that, so that means you position your price, you fill in the price that when the trade hits the market, the price hits 150 million, your trading stops. Now the other limit price is the price on which now you want your trade to execute, but that price should be lower than your stop. Because why? At times when the markets are too volatile, you find that it is too quick to drop, finding that maybe there is no any order that is in between 151 million. So you find that your trade may not execute and you end up losing. So you have to position yourself at least a limit price below your stop price. So let's go back and you see what exactly has meaning. So again, still you tap on your stop. So you say 150 million when the price is to 150 million, let my trade stop. So as we say that you put yourself below the stop limit, the price, the limit price, you put it at least below your stop price, so your trade can easily execute. However much the markets are going to be so quick, the price drop is going to be so quick, your trade by all means will have to execute. So at least when we are putting our stop limits, let's put around 150 million, maybe 500 or 200 or 300, but I prefer putting a more higher value so I don't miss out, or my trade does not miss out to at least execute if there's a rapid drop in, a rapid dump in price. So let me put 150 million. I think that's it. I can even put here 1,000. I think that. So it depends, guys. This is just my suggestion. This is just what I've tried to position, because even I lose this 1,000, it's not something much, but it is better you put some figure that will leave you safe in case of a rapid dump. So after placing your price, your stop price and limit price, and you feel that yes, that is okay, so it's like you're protecting your trade, even though you're not there, you've slept off, and like today is a weekend, most of the people are just having fun with their family, and the markets drop suddenly. By the time you come to check, finding that wow, the markets dropped this back, to find that you've gotten back your money, and you are even in position to enter now a trade below the price that you even initially entered in. So you also have higher advantages of again catching up with another trade when prices start moving. And remember, you would have bought it again too below even the year-on price, so you'll be able to recover even the small amount of money you lost in placing your previous stop loss order. So guys, that is it. In case you have questions, ask. Guys, don't forget to subscribe. Support us, guys. Support us. Whenever you subscribe, whenever you tap on a like, you're really driving the algorithm. Like here, you're telling YouTube that hey, we need these videos, we need to watch these videos. So it's like you're putting us onto the next level. You're driving our content, you're sharing, you're making other people to find such useful information. Though I understand a lot of videos all over there, YouTube, there are better videos than this one, but the way I make this one specifically to catch the audience, so it can be of more help to each and everyone, to a beginner, to each and maybe. To wrap up with this, the best strategy I can give to everyone, you can keep on adjusting your stop limit depending on the way the prices move. You can keep on adjusting slowly, so even though you're taking some profits, so you can keep on adjusting. So in that scenario, when prices drop, you can still make profits by just adjusting your stop limit. So in case previously, as we had said, our stop was at around 150 million, and assuming the price moves to 152 million, so you can even adjust your stop again to 151 million. So it keeps on moving like this. So when the sudden breakdown happens, you find that even you've taken out some profits.